Hi, I'm Debi Peverill, and you're listening to a post about pricing and profitability. Today I'm talking about controlling your tax bill. And that's fairly optimistic because mostly we don't control our tax bill with Canada Revenue Agency. They have their own ideas, but there are things that you can do. And probably the biggest one where people are paying more tax than they need to is business owners who don't incorporate their business when they're making a lot of money. The corporate tax rates are much lower than the personal tax rates. So if you're making more money than you need to take out of your business, then it makes no sense to be paying tax on personal income. So let me tell you about Sarah. Sarah is a carpenter, and in her second year in business, she has a net income of $350,000. However, Sarah was very busy, and in common with many business owners, she didn't get around to incorporating the business. So now Sarah's going to pay personal income tax on $350,000, which is going to cost her around $150 personal tax. If she had incorporated, the corporate tax would have been less than $50,000. So you could make an argument there that there's about $100,000 being wasted because it's going to be money going to Canada Revenue Agency when it could have been avoided. So this is something to keep in mind. Once your business is at the point where it is making more money than you personally are taking out of it, then it makes all the sense in the world to incorporate. Because if you're going to have income you're not getting personally, would you rather pay tax on it at 11% or 51%? Right? I think probably 11%. So there's that. This isn't really a post about incorporating. We do have ones about incorporating if you're interested in that. What else can you do to control your tax bill? Absolutely file and pay things on time. This is the simplest thing. People ask me how they can save on income tax, and I've always, keep all your receipts so you get credit for everything you spent money on, and also file everything on time and pay things on time so you avoid the penalties and interest. So government remittances. If you have employees, you have source deductions that are due by the 15th of the next month. If you don't pay that within a week of the 15th, you're going to have a 10% penalty, which, of course, will have interest added to it and will add quite a bit to the amount you need to send to them. You also have HST or GST, depending on where you are. Those sales taxes are not your money. You gathered that money up from your customers. You should be keeping it in a separate bank account so when the time comes to file your HST return, you've got the money to pay the HST that you owe. And that way, there's a whole lot less interest that you have to pay. You also might be asked to pay installments, either installments for your corporation or installments personally. So with the incorporated installments, they're every month. So you can get into a routine of that. If you normally owe $24,000 in income tax, you pay $2,000 a month. That is way less painful than writing a check for $24,000 at the end of the year, plus interest on the installments you should have paid and didn't. So if you're asked to pay installments, you should do that because that will reduce the amount of interest you're going to pay. And also, like I said, it spreads out your cash flow. So if you're looking at your income tax, it can be a big expense. You can reduce it by incorporating your business if it's profitable, by paying all of your source deductions, HST, corporate tax, and personal tax on time to avoid paying more money for that than you have to.